So welcome back everybody into another daily recap. Today is 24th of January and as always we're going to have a look at gold, what happened today. So as you can see here, this is the daily analysis. This is what before London Open, this is 2 hours before London Open, what I was looking for, and price already made a new retest of this previous PSA, and I was expecting high risk high reward sells at this level, which was around 1937. That was already touched during Asian session and of course yesterday. Actually this was Friday. Apart from these high risk high reward sells, what I was looking for were buys, mainly buys at this PSA 1932.9 intermediate zone, which was not a key level, but as you can see it was a nice zone. And of course key level 1929 and key level 1923.5. And let's see what happened today. As you can see here on the hourly time frame, that's what actually happened. We have the push already from pre-London. This is the hourly from pre-London, and London Open actually made the rejection at 1939. But as you can see from my level, which was 1937.9, it pushed like around 40 pips, and we're going to see it at the price action on the 1 minute. After that, we can see a pretty nice and clean rejection point, rejection at the key level 1939. This was pre-New York and during New York and also New York Stock Exchange. As we're going to see, we had the push, bearish push, as you can see, down to 1917, which is the daily PSA that was already charted up from yesterday. And you can see there's a continuation in the bullish bias. As I was telling yesterday, prices are always, even if it's not that clear, is always making higher high, higher low, higher high, higher low. Today made a new higher high during London and failed to make a new lower low during New York. So that's where you can find that there's still a very bullish trend, and that's very clean. That was on the trend and it was already there, but that's the main price point, 1917 as well. And we're going to see it also on the 1 minute how clean that was. Let me just, I want to make to see it. Okay, that's perfect. So that's exactly how it played out. And I mean, now it's quite a mess, but let's go back into the 1 minute time frame. So as you can see, this is when I did my analysis around 7 a.m. So we saw that the price made a push, a bullish push anyway, and my level of interest was 37.9, which is around, was 37.9, 7.4, which was around here, 7.4. So that's exactly when we see, of course, this was the high risk reward sells. I didn't put any buys above, but as you can see, the price action is pretty clean. We have an impulsive move. This is pre-London. This is pre-London Open, the European session open. But we identify that price made a new higher high on the 1 minute time frame, and then we can place our retracement tool. Our retracement tool, as you can see, it's very clean at 75%, which is of course the previous PSA on the left. This was the last higher high on the left, and that's where we have the retest. We have a clean candle confirmation, and that's where I could have entered if I was trading this time for like around 40 pips, which is still 3-to-1 risk to reward. That's because the stop loss can be pretty tight in this situation. We see we could even only target these levels, but even for a scalp that will be a little bit short. And with the risk to reward, I think it will be like a 2-to-1 risk to reward. Yeah, not even 2-to-1. What you can see is that during the London push, this is London Open, we see the usual impulsive move, the liquidity grab. This is the vacuum move. As you can see, huge volume is coming. Look at the size of these candles compared to the size of this candle itself. That's the huge liquidity vacuum to a new higher high where the sellers can jump in and find their orders. But that's if I was already in this bias, that would have been a clean break and a pullback at 75%, which was my rejection area. So as you can see, that's my main point. This was my rejection area. I didn't consider buys above, but it would have been a nice break and retest above. Apart from that, what I can see is that, yeah, the rejection from these levels, that's exactly what happened with London. So we see that price after this movement, let me just hide. We see that the price after this movement made a new 1 minute lower low, breaking below this previous order block of orders. We have a break retest of the key level. This is the retest of 1939 key level, 39.5 key level, and that's where we could have entered here the sells. This is the retest of the key level. So this retracement tool is for the bigger picture that we're going to see later, but this is the retest of the key level, giving confirmation that the price is rejecting this 1942 level, which I guess if we actually place a line, we can see that there's some price sensitivity area on the left hand side. I don't know from when, but that's absolutely, as you can see, a huge price sensitivity area. Of course, it's an area, it's not a line, but anyway, with the confirmation of the we're not entering at the first touch. It's not like, okay, we have this key level, we are going to enter when London fails to break. We wait for a new market structure. From a bullish perspective, now we break and retest the previous higher low. So we are making a new, this is validating a new lower high. So that's when we shift the bias. This was seen live and was a pre-planned trade idea. So that's where you could have got your easy 45 pips, still a full 3-to-1, and that's just to target this previous area. So that's a scalp trade. It's not an intraday trade. Let me hide this. So then what happens is that at this level, what I noticed was double bottom. So we have this slow but steady bearish trend, and we notice a double bottom here at 1934 or at 1934. Clean, nice double bottom and a break above. This one was seen live. I think I also have I sent a picture. So yeah, this one was the trade that I saw, and I want to see. Yeah, this was the trade, and I didn't send it. But the only thing is that this trade was I saw it live, but I said, okay, you see, that's a 10 something point stop loss. It's more than enough. That's because we are still below this level. The point is that we are like not even, I think, like 1 pip below. So I should have taken like still like a 12, 15 pips stop loss. If the target is 30, there's still a 2-to-1. But eventually this paper trade would have been stopped out because of too greedy, this stop loss. This has been too greedy. And I wanted to check if this actual, what's the word? This liquidity was, no, I had to check it here. But I think is already there. Okay, wanted to check if on the hourly or even on the 15. This one was a nice PSA. So as you can see here, now we are on the 50-minute. That's where we have the reaction. As you can see, if you go on the left hand side, that's what I like to do. You can even put a rectangle here, just extend it to the right, and that's where you see that this level is giving a lot of reactions, even here. So that's if you copy and paste this on the 1 minute, you will see how exactly this whole area was a price point of interest. So I would, with a 15 pips stop loss covering the whole area, that would have been a nice entry at high risk high reward entry. And understanding why the shift in bias why understand the shifting bias into bullish before we're not at any pre-planned price point of interest. We're not, as you can see, we don't have anything here, 32. We don't have anything at 34, but that's where the understanding was coming from, because this double bottom reaction, and we have a few minutes, we have like 15 minutes to understand where the price is reacting to, and with the proper stop loss, that would have been a nice entry. Then, as you can see here, that's what I saw as well. This one was absolutely pre-planned. As you can see here, when the price is making a double bottom, I was considering both the buys. This is the buy, there it is, this is the buy, and then understanding that this is still a very bearish trend. So we can see, thinking about a higher time frame, that we can have a reaction at 75%, 61.8, 71%, and that's where exactly the price point reacted for a nice and clean 30 pips. This is a 30 pips, is basically a 3-to-1 risk to reward just for this sell. And again, what we see later on is, let me just, okay. This one would have been an attempted continuation. This is just paper trade. That would have been resulted in a loss, like 9 pips loss. It was just a continuation, but now we are here. So we are back at 1939.5, which was where I was looking for sells from the London session. And we see that New York, pre-New York, still after all this price action, fails to make a new high and is strongly reacting here. You can see even if you don't have to take the first candle, but you see that the price is making a new lower high. It's the same, just in less candles than here. It's exactly the same. You can see that the price is making new lower high, is retesting it, and then going down. So that's where this is why my analysis, why the sell at this level. That's why I take it as analysis. And then price is going bearish, and then that's where I took the actual 2 trades. So as you can see here, this was the price point of interest from the morning, 32, which was this one, 1932.9. As you can see, it's not a key level, it's not a very strong price point of interest. It was just the previous lows, and that's where I took my trade. That's what I'm not proud of. I took the first trade of this PPL, and I didn't really like it. The timing was off, 8-9 minutes before the new 4-hour candle, and not even a single candle confirmation. And as you can see here, then I retook it when I saw it. It was here. I saw, yeah, you see, this is a double bottom. We are making a double bottom at my area of interest, so it's still good to enter, even if it's a losing trade. It's still good to enter at your analysis, because that's how you experience it. And of course, this one, as you can see, this could have been a nice double bottom, but that's resulting in a loss. But anyway, it is part of the game. Then what I was really interested in was a sort of double bias. As you can see here, we are strong at 1929. We are pushing strong. You see, deeper pullback 10 minutes before the New York Stock Exchange open, and that's where also my analysis was buys from 1929. So we are here, but in this case, we are look at the bearish trend. It would be, I don't know, I was not feeling comfortable to take this trade as well, because we are very close. We are in a very strong bearish trend. So as you can see here, just placing the retracement tool, and that's what I was looking at. As you can see, yes, you can even just understand it as here, simply because of market structure. For example, let's put it as sells. As you can see how the price is, let's remove this, the price is reacting over there. Let me just delete this, and you see that the price is staying below. So that was a mixed bias. and also it's a 61.8 perfect retracement. And of course I think at 3:45 we had the news. So as you can see here, we had much improved PMI, so service PMI. So that's why we had a very strong impulsive bearish move, giving strength to the dollar. And that would have fueled like a nice, even more than 3-to-1 risk to reward. This one would have been a huge, like 8-to-1 risk to reward. But of course, as a scalper, this one will not be the case. But it's fundamentals. And again, this one's still a nice retracement, but it was just after the fact. And again, as you can see, how the daily PSA acted from this one was the daily PSA that I was chatting up last week, and how it one single candle, this is after the 10 a.m. candle open, pulls back, grabs liquidity, and then the whole move gets faded out. Of course, yes, that's very nice, looks very nice here. It looks very nice price action, but as you can see, I didn't have any buy set up at 1917. Also, it was not on the chart, so probably I wouldn't seen it, because of course it's matching the PSA already, the trend line from the morning. But anyway, yes, you miss this whole move. This is already a 100 pip move in like 5-6 minutes. That's crazy. But as you can see, okay, you miss it. Okay, what am I waiting for now? Do I have further opportunities? That's where, okay, you see that the price is retesting here. What this candle close is showing you this trade idea that was already from the morning, which was the bias from 1929. These key levels are not absolutely to taken on the dot every time, but understanding the market structure, understanding the liquidity, where is it coming from? This liquidity is coming from a daily PSA, so it's not just simple liquidity, it's very strong liquidity. So then we can expect price to continue bullish, especially if you see on the lower time frame how still price is making higher highs and higher lows, and that's where you could have entered and taken. This is a very nice 3-to-1, 20 pips stop loss, because now the volume is high, so you can't have a 15 pips stop loss. But if you have like a 1 to 3 risk to reward, that would have been an easy scalp for 60 pips. So that's basically it. Buys above. This is a very nice and strong candle rejection from a daily PSA, as I said. Let me just because I think it's hidden as well. There you go. And that is pretty simple. On top of everything else that happened today, that was a pretty nice and understandable trade idea. Okay, yeah, that's basically it. So this is it for today. See you guys tomorrow.